A guy named Marcus had $800,000 sitting in savings and a job he'd been done with for 3 years. In other words, he didn't enjoy it. He didn't want to start something from zero. He didn't want that risk. He just wanted to own something that already worked. So he bought a small landscaping company, 8 employees, steady contracts, 1.2 million in annual revenue. 18 months later, he replaced his entire salary and gave his notice. The deal wasn't lucky. It was the result of knowing exactly what to look for and, more importantly, what to walk away from. Today, we're going to discuss how did Marcus find that specific business? Where do you even look? Number two, how did he know the numbers were real and not manipulated? And then number three, what would have made him walk away? What are the red flags? Hi, my name is Tommy Cloud. I'm president of Third Act Retirement Planning. It's a company that I started back in 2000. Our team has helped people across the United States manage their new wealth wisely. We believe your money should give you clear peace of mind, not stress and confusion. Our mission is simple. We help people who have currently received and come into a large sum of money and invest it in a smart way. Our goal is to cut your portfolio losses and recovery time by at least 50% during stock market downturns. And at the same time, we aim to match the long-term growth of the global stock market. We also help our clients save $100,000 or more in taxes over a 10-year time period. All right, let's get started with this. What I'm going to do is I'm just going to go in here. I've picked the state of New York. I'm going to go in here and we'll say that you have at least a certain amount of money. You'll probably need, I don't know, maybe $200,000 or $300,000 to put down on a decent business, depending on what the multiples are and what the profit margin is. We'll say you probably, if you've received an inheritance or won a lawsuit or retired and now you have this big 401k or you've got NIL money, you're all going to be looking for different things. For example, if you have NIL money, you're going to probably want something that's hands off, that you're not going to be as involved with your time. In my opinion, there's no such thing as completely owner-operator. This is something I am an expert in. I have evaluated hundreds of businesses over the last couple of decades, and it is something that I would say humbly that I'm probably in the top 1% in doing. It's something I'm very familiar with and understand how to do. I've purchased business before with groups of people, small businesses, and sold them as well, and helped other people evaluate opportunities to buy and sell businesses. But what we want to do is I've just picked the state of New York here, and I'll just talk through it. I'm thinking, let's say that if your goal is you want to walk away with, say, at least $200,000 a year, let's just say. Your cash flow you're going to want to pick out is probably going to be $300,000 at a minimum. And let's say, depending on how much you've got, you probably want to try to put down 30% to further take some of the risk away. These loans are typically 10 years with the SBA, but we'll assume you're putting down 30%. So the cash flow, we'll cap it here at $750,000. And this is the SDE stands for seller discretionary earnings. And this is exactly what the owner of the business is reporting that they're taking home and taking home for their family each year. So what we'll do is we're going to go with that. Gross revenues, fine there. Let's go ahead and hit apply. And then price range, we'll leave that we won't mess with that one. Let's make sure, we won't mess with that one. And then we'll go back in here to filters and let's see. We'll hide listings without price. And let's scroll through here. So this one looks like a good multiple here with 325,000. So it's you want about a 3 or 4x on the cash flow. So if the cash flow is 325, you did a 3x multiple, it'd be 975,000. If you did a 4x multiple, if you really like the business, it could go up to 1.3 million. So you want to be looking for, again, 3 to 4 times this number here. Now, 4, I would reserve that for businesses you really like. And the harder the business is to run, the more risk, the more draining, and the higher the failure rate. For example, restaurants, the lower the multiple. So a restaurant could have $325,000 of cash flow and only be listed for $700,000. So you want to look at something that you may be interested in. I'm just going through here. That's a really low multiple. That's not even a 2x multiple. This Shopify business, that must mean it's not that old. You also, depending on how much risk you want to take off the table, the older the business, the better. Reoccurring revenues are better than projects. So if you have a construction company that's 20 years old, they still don't have any reoccurring revenue. If you have a type of business with reoccurring revenue that's 20 years old, then that's going to be safer than a business that doesn't. So you have to put all these things into consideration as you're looking for a business to purchase. Here's a print and promo company. It's only a 2x. No experience necessary. Let's just click on that one for a second. That's interesting. It's not that expensive. It's been around since 1990. That's a very good sign. Here, this is in the Albany area. They're saying, and I don't know how to pronounce this word here, but as we look, this business has an excellent reputation, possible real estate opportunity. Owner owns the building. Okay, so you could even do that. And that would be a 25-year loan. You may have the opportunity to combine the business and the real estate together for a lower payment. 5 employees, seller finance is even available. And with these type of projects, business to business marketing, print, one thing you want to go in here immediately is the Minuteman Press. It looks like it's a franchise, which I think makes it even better because then you can get trained by the franchise and get in there on something like this when you're going into an industry that you don't have experience in. But this is something here that let's evaluate this one here, and then you can apply it to the other ones. I'm not here to make a long video on this, but it's asking $600,000. The cash flow is $310. It was started in 1990, so that was over 30 years ago. That's outstanding. It's a franchise, which we like. The area is Albany, New York, if that's an area you want to live in. But we go in here and we'll just type in SBA loan calculator, and we'll just click on one here, and we'll change this to a 10% interest rate, 10 years. And if you're over here and you're putting down, let's say you're putting down on this business, you want to put down, say, 30%. So you put down $180,000, take that away, and that's going to be $420,000 you need to borrow. So let's just say we put in $420,000 to borrow. You've got a 10% interest rate on 10 years, and you can see the payments are going to be $66,000. Those are your payments per year. We'll then go to back to over here. We'll look, so that's $310,600 is what the owner is taking home. That's what they're getting paid. That's what cash flow is. Cash flow is oftentimes higher than EBITDA with small businesses. So we'll go back over here to the loan tab. You can see it's $325,000. The payments per year are $66,000 on a $420,000 loan. You put in $180,000 cash in there, and then you do want to have the seller finance as much as they're willing to. You want to push this because the more you push this, the better the chances are that the transition will be better typically. Now, with a franchise like this, it might not be as necessary, but I welcome seller financing rather than taking it from the SBA. Let's go here to the calculator and we'll just look. We'll take $325,600 and we will subtract the cost of that loan per year. And you put in $180,000, and with this business, if revenue stayed the same or grew, then you would be paying yourself about $250,000, $259,000. That is definitely the kind of concept that you want to look at. Now, you may not be interested in Albany, New York, of course. You may not be interested in business-to-business marketing and owning the Minuteman Press franchise. However, this gives you an idea. This is something that's one you'd want to look at, something very good that you want to look at because the multiple here is less than 2. If you take 310 times 2, that's 620. And remember I said to start this video that I'd be willing to pay between 3 and 4. So when you find these ones that are at 2, then I think it really gives you a chance to be a lot more profitable. And as you could see, take home $259,000 after loan repayment. But that's how you evaluate these. You really just takes time. It takes patience. They will send you what's called a SIM. That's just an overview of the business. They'll ask for an NDA, which is a non-disclosure agreement that you're not going to tell anyone this business is for sale. Once they give you more information, they might even ask you financial information, like what's called a PFS, a personal financial statement. You can go ahead and do that and fill that out for them. This is not something that's typically done overnight. This is something that you'll want to take your time. You'll want to get advisors. And you'll want to have the income verified. And the best way to verify it is go by tax returns. If what they have listed on the listing equates to their tax returns, you're in very good shape. If you have to go back and begin verifying things in bank statements, which you usually will, because the seller discretionary, let's say the business is paying for their cell phone. Let's say the business is leasing their car. You're going to have to start subtracting that back out because you're not going to need their car. You're not going to need their cell phone. So that is fair to add that back in for seller discretionary income. So you would want to add that to what you're seeing. But when you look at a tax return for a small business, it's very easy. You'll take the net income and then add to it officer compensation and multiply it times 3 or 4. And that's about what you should pay for the business. The closer you are to 3, the better. And if you can find these around 2, that's even better, especially. And then you want to look at the longevity as well. And that's basically it. If you need any help looking at one of these businesses, just click on the link, set up a free, no cost, no obligation, and I'll be happy to go through it with you. I've been through it many times before, and we can talk about it if we think this business makes sense for you. If you like this video and want to see more content like it, click like or share it or make a comment or be a subscriber, and we'll show up in your algorithm more in the future. Thanks for tuning in, and we'll see you on the next episode of Sudden Wealth Stewardship.